On the Business Funding Now page, right?
Mm-hmm.
We are live. Hello, everyone. How you guys doing? Um, we've had some technical difficulties for today's live, so apologize. We got a late start, but we got some good information for you. Today, I am with Rosalore Lewis, and we're going to be talking about how credit is affecting us now during the pandemic. Some things from that we've learned from the last economic crisis, as well as things that we should be doing, as well as things that we need to be prepared for. So, without further ado, how you doing, Rosa? You want to introduce yourself and tell the people a little about yourself?
Yes, great. Thank you, Jeremiah. Thank you so much for having me today. Well, my name is Rosalore Lewis. I am the CEO and founder of Budget Credit 360. I am also known as your credit goddess. I've been in the industry since 2016, and I've watched it grow into this tremendous community of individuals that are looking to repair their credit, to have a better life, acquire assets and things like that. Which I love. I'm a big advocate of financial literacy. I've helped hundreds, well, say close to thousands of families so far with their personal credit. I coach to help them establish better credit, like I've done myself, and also business credit as well, with the help of Jeremiah himself. So yes, I'm so excited to be here to talk about your credit during COVID-19. So I'm glad that you thought of me, so that way we can have this conversation, because it is needed. It is needed.
Absolutely. And things are changing by the day.
Mhm.
So let's just have a conversation. How's this COVID-19 affected you and your business?
You know what? To be honest, I was prepared for another recession. I didn't know how it was going to happen, but um, this is a sign that we are leading towards recession. And I thought that it was going to affect my business, but believe it or not, it actually increased business. It has, yeah. More and more people are seeking to own homes, because of the idea that the interest rates are lowering, and it's a perfect opportunity to jump on a mortgage with good interest rates. So a lot of them are reacting with the opportunity, getting their credit together, so that way they can purchase a home with lower mortgage interest. So that's majority of my clients right now, and majority of my clients are from business owners that are looking to um, acquire business credit because of the declining in business, because of restaurants and stores, and businesses are closing down, or having to keep their employees. A lot of them are looking into the opportunity to build business credit, so that way they can sustain their business during this time. So that has increased.
Yeah, well, that's good because I'm telling my clients as well. We worked on a few deals together, but in general, everybody should use all the resources they have, as far as the government stimulus, unemployment, PPP, EIDL, whatever resources you can to sustain you and your family through this time, as well as prepare for what's to come. There's a lot of talk. I know you have some history with the real estate. We did talk about real estate from another angle last week, but I want to get your opinion on what was the real estate market like in 2008, and what are some of the trends and things you're seeing that are similar, and what's things you learned to better prepare yourself as a homeowner, as an investor, things of that nature.
Okay, good question. 2008, it seemed like it was yesterday. Um, I was I was a loan officer for Yale Mortgage. They were a hard money lender. And I remember like it was yesterday. I remember when the CEO brought us into the office and, was just giving us, a new update of what was going to happen during, a recession that was coming. I didn't know what it was. I didn't know what a recession was. Believe it or not, I thought it was the end of the world. That's how it was brought to me. Oh my gosh, crash. What is that? I've never heard of that before. And so, he assured us that, um, don't worry, we have a $20 million portfolio. We'll be able to keep, you guys employed. Don't worry. But 3 weeks later, we got a pink slip.
Mm.
And that was the start. That was the start. Now, prior to the crash, I remember I'm 41. So it back then I was like in my 20s. I didn't understand real estate and things like that. But being in that industry, in the mortgage industry, um, I was young and didn't know what was going on there. So it was like a learning experience. But before the crash, I remember, and I live in South Florida. Homes down here are really expensive. You don't get much of a home for like 300,000, like you would up in Atlanta or anywhere else. But I remember like a 2 bedroom, 1 bath home, like a shotgun home or a condo, 2 bedroom, 2 bath condo, where they were going for like 250,000. And I'm like, why is that going for 250,000? How much higher are these homes going to go? I remember asking myself that. And this is when it all came together and it clicked. With the housing market crash is a reset. And I hear that resets happen every between 10 to 15 years. So when I asked myself that question before entering into mortgage, this is when it just clicked to me. I'm like, okay, so the housing market crash and the decline. Now, what actually concluded it for me was in 2011. My boyfriend and I, we were looking for a place to stay, and we were moving. So I remember when we first met, he's like, Rose, how is your credit? And I'm like, why? Because I mean, I've never been a credit person. I've been a cash and carry person coming from a Haitian background. My mom always taught me to never borrow anything on credit, don't owe anyone, you don't want debt and things like that. So she really never helped me understand what credit was for. And so um, when we were looking for a place, we knew not to go and apply for like an apartment complex because they check your credit. So we wanted to deal with like private owners that really didn't really care. They want your first, last security. We got that. So I went on Craigslist and I found a 2 bedroom, 2 bath, a den, 1,200 square feet for $800 a month. That is unheard of in South Florida. So I said, I'm curious because those are hood prices. And I don't know any hoods in Coral Springs out west. Really nice area, not far from Parkland. So we drove over there, took a look. It was like one of those apartment homes. That's how big it was. And I asked the owner, how much, why are you renting this for 800? Why? So he's like, oh, well, I'm from Australia and I just wanted to occupy it before I leave. I said, okay. That didn't answer the question. So I'm like, okay, so how much did you buy this home for? So that way I can do the calculation. He said $18,000. I said, what? $18,000? And I'm like, was that a hookup? Was that an inheritance? What is that? He said, no, that's how much the homes are going for. I'm like, no. Now, mind you, the very first time when I asked the question, why are these homes going at 250 to 300,000? Now hearing $18,000 for a 2 bedroom, 2 bath. So I went and checked every single real estate app I could think of. And sure enough, condos and townhomes were going as low as $9,000 to $30,000 from South Florida, stretched all the way up to Orlando. And that is when the light bulb hit me. I said, that is why I need credit, because I didn't have the cash. Jobs were scarce back then in 2011. The economy was picking back up. So I said, this is the ramifications of a recession, you know? Now, after the mortgage company laid me off, the only jobs that were available were commission only jobs. There were no 9 to 5s, couldn't couldn't find that anywhere. So now the job that I ended up applying for was with Keep Your Property, and they were performing loan modifications. You know that.
Yeah.
Now I've never heard of that.
Yeah.
What is that? So what they were doing were modifying mortgages to the current value of the home at that moment. And that is when I started learning more about mortgages and things like that. So it was a learning experience after the first housing market crash that if it was to ever crash again, one, I know there are opportunities that will arise during a fall, so it kind of prepared me for this. So I'm not afraid, because I've acquired a lot of skills after that, and then I've also acquired like skills on consolidating credit. And that's when I started getting into credit. I looked into it. I started looking to my credit 2012. I started building. I didn't repair because I didn't know anything about repairing. I started rebuilding. I started applying all the books that I've been reading, like How to Build Millionaire Credit. I've applied that. Now, mind you, I was scared. I was scared. I was scared. I'm going to be very candid. I thought credit was for white people. I really did. I thought credit cards were for rich people. This is how ignorant I was back then, And when I was reading a book, I was very, very scared on building credit because I thought I was hacking into the system or something. Like that was my mindset. So with my clients today, I'm able to relate with them and understand their thought process when it comes to credit because we were never taught what credit is, how it can be beneficial to us, especially when using that as leverage to build wealth. So with that question, like you asked, how important credit is during COVID?
Yeah. It's between being homeless and not be, and keeping the roof over your head.
Right. Leverage. Yeah.
Yeah.
So yeah. So imagine during this time, around this time, as everyone is, being fearful of what's going to happen, with my mindset and what I've experienced between 2008 till now, is like I find this as a moment to prepare. So I'm in the position to help my clients and assist my clients and help them along the way on preparing, so that way when we come back from all of this, we're ahead of the curve instead of being behind.
Absolutely. And that's the whole point of my company, and as well as doing these webinars and these lives, is to give people information, because there's so much misinformation out there right now. I mean, with the unemployment skyrocketing right now, the government trying to get money out to individuals through unemployment, stimulus checks, through business owners, and it's just chaotic, to say the least. That what to do next. And I really wanted to give some people some assurity. If you are blessed enough to have your job, or still getting an income, still have a roof over your head, and are able to provide for your family, some steps, some tips, some things to do to protect their credit and their financial situation, but not only that, improve it. So when things do, whatever transition, some people say there may be a housing crash. Some people said that it might come later, that, it's all unknown, but there is going to be some ramifications because of COVID-19 that it could be detrimental to a lot of people. And we understand that, and we hope to help people like that as well. But if you're blessed enough to be secure, taking some steps now and being prepared, or just to make it through. I mean, there's opportunities. There's some businesses that are blowing up. I read about Jeff Bezos, the owner of Amazon, is scheduled to be the first trillionaire on the planet because of COVID.
Wow.
I shared with the audience a few weeks ago that there's one client that sells chrome polish online, and his business is blowing up. I mean, he did like over $100,000 in 1 month, and
Wow.
6 months ago he was struggling to do $20,000 of sales in a month. So, um, some there's niche markets that are really blowing up for some people, and then
Mhm.
others you thought were, kind of economic or disaster proof are tanking. And I like to, since most of the people that I deal with are business owners or people who want to start a business, um, what do they need to do from your end, from your expertise and your experience of how to manage their financial situation through something like this? Even though most none of us have been through anything like this, but when there's job shortages, when there's the economy, meat's going up, and I mean gas prices going down, it's like, who knows what to do. So just put your little 2 cents on it. We're not, per se the experts in all things, but we do have some practical advice and practical knowledge that might not be available to the general public.
Right, right. Now, due to the fact that many people are losing their jobs, and now it was a peak of clients, or I would say consumers, that were getting approved for large limit credit cards.
Mhm.
So I'm sure that many people are using their credit cards to, make ends meet, or keep their expenses at bay. Now, I remember before 2008's crash that a lot of my friends that were using credit cards, they were getting their limits slashed.
Yeah.
If they had a $5,000 card, it got cut half or even low. So now the reason for that is now you have to understand when it comes to credit, and when you're given an increase on your credit, is when you show that you have good money management, right? So during this time, you may find yourself using the credit card a lot more, right? So the advice I want to kind of give you guys is start with a budget. Start with a budget. Start cutting off um, things that you really don't need at this time, like any subscriptions. Even we're not able to go to the gym right now, so cut those off. Limit down your streaming. I use Apple Music. I love my Apple Music, but if I have to budget, I have to let that go. So if you have any type of subscription where it comes to music, television streaming movies or anything like that, limit it down to one. I know I have multiple, but limit that down to one. If you guys have any cable, and you have all the sports channels and things like that, limit that down as well. Try to limit as much of your expenses as much as possible, so that way you have more cash in hand, because that is going to be important. You don't want all of your money going out as they're coming in. So that's one advice. So budget, budget, budget. Okay. So if you guys have credit cards, and you were used to making more than the minimum, if you finding yourself at a point where you have little coming in or able to save, make the minimum. It's okay to make the minimum. Okay. Try to make the minimum, especially to try to preserve as much cash. You want to hoard as much cash as possible, because if if the pandemic, if we're in a situation and it gets worse, again, you want to have as much money in your bank as much as possible. Okay, so try to limit as much going out to liabilities, and try to preserve your cash. Now, if you're not able to make a payment, it's very, 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 very important to, again, like I said, make the minimum payment, or at least contact your creditor or your lender. Contact them, because they understand at this time, people are losing their jobs. So minimum are going out. So call them and make an arrangement, because if you don't, they don't know what's going on, you know. So let them know that you need to make some type of arrangement with them, and see what they are able to assist you with. Okay. And like I've already mentioned, if possible, pay what you can. Try to avoid late payments, because one late payment can tank your scores, and it will set you back 6 to 9 months to rebound from. So you don't want that one late payment to hit your credit report. Usually the late payments hit after missing the first payment 30 days after, not when you missed it one day. A lot of people have that confused. So try to make sure that you're not 30 days late, so that way it doesn't report. Okay. And then stay up to date with your credit report. Okay, so you're entitled to a free copy. Now, I believe it's the annual credit report are allowing you to pull once a week now, not once a year. So you can pull once a week and check your credit report. Make sure that there is nothing inaccurately reporting, no mixed files and things like that, because that can also take your score if there's any information derogatory that does not belong to you, or if you're a victim of identity theft, because I'm sure identity theft is going to peak. So make sure that you check your credit reports. All right, and then consider adding a consumer statement to your credit reports. You can add up to like 100-word statement, and let the creditors or your lenders know your financial situation. It's always good to have that on there. What else? Now, for those that have assets, right? For those that have assets, if you have a home, make sure that your home is in tip-top shape, right? So just in case you have to sell it, or just in case you want to rent it out, you can get as much as you can. So make sure that you have that in tip-top shape. All right. I've already mentioned that you want to hoard as much cash as possible, but you also want to build sources of liquid funds. You want to kind of bring in more money. I don't know if you saw it on my page, but I'm talking to my audience about adding additional streams of income, or if any way that you can bring in additional streams of income, so that way you're not counting on one income like your job or your spouse's income that's coming in. Because if one of you guys lose your job, you don't want to just be down to one income. So you want to look at additional streams of income, whether I say look into an MLM, or looking to sell something. Look into selling something that people need. Like right now, masks. Like if you're
Well, you hit the mute button. There you go.
Okay, so if you're a seamstress and you're very talented and you're good with your hands, create masks, sell those. That is in high demand. High demand. That will bring in extra income into your home. Okay. What's another? I would say develop a banking relationship. You got Jeremiah right there. You got me for credit. That's very, very important. And just in case you need to borrow money in the future, you have Jeremiah. If you need to get your credit together, you have me. That's very, very important. So that way you have access whenever you need it. So build a relationship with a banker during this time. Buy cash flow properties. For those of you that have liquid funds, buy cash flow properties. Prepare for the real estate downturn, because that is when properties are going to be cheap. Okay. That's when you can buy at wholesale prices. And as the economy picks back up, you can sell it high, or you can hold it and then you can rent it out. If you guys have a home, maybe 2 properties or 3 or so forth, negotiate long-term leases. If you're negotiating long-term leases on your properties, that's guaranteed. I wouldn't say 100% guaranteed, because in case they lose their income, then things may happen. But you want to have a solid source of income coming in when you have long-term leases. So try to do maybe like an 18-month lease, for a 2-year lease and lock that in, so that way you know that that is cash coming in. So that's pretty much it. Anything else you can think of?
Well, yeah, like I said, I'm telling people, like you said, uh, check your credit, keep up with all your bills, and or if you need help fixing your credit, now's the time to do it, preparing yourself for what's to come next. So, like I said, if you're blessed enough to still have a job and have income coming in, and you can afford to get your credit taken care of, because people are coming to me looking for money. And the number one issue why I can't lend to them and get them the money, because, unbeknownst to a lot of people, the banks are still giving out loans,
Hmm.
regular loans through the same requirements that they had before, but
Yep.
they're all heavily contingent on your credit and your debt to income. So everything Roosevelt just said about keeping up with your payments, keeping your credit utilization low, if you have that option. But even for myself, right? You know, getting a $50,000 loan, just to put it in the bank. Okay. And let me just run this scenario by you. I commonly get personal loans for people for that qualify, 50 to $100,000. It's like, a Monday, Tuesday, every day of the week. It's not a big deal. But if you don't say you need $50,000 right now, just have it to put it in the bank as a nest egg. Uh,
Hmm.
they're usually term loans up to 5 years. And just hypothetically, if you had a loan for 50,000 at the highest signature loan rate, which is in the high teens, about 15.99%, roughly, your payments would be, about 550, 560 a month for 5 years. You could set a whole year of payments as less than $6,000
True.
aside out of the 50, and then have to use that other money to generate other streams of revenue, right? Be prepared to invest in real estate, uh, create another product and a website and a marketing campaign to get your product to the general public and get those additional sales. Um, One of these gurus that I follow, and I've been to see him several times, is said that we should be adding 2 to 3 new streams of revenue a year to our portfolio, and not being reliant on one stream of revenue to cover our livelihoods. Because if you do lose a job, you got something else. Or if you do lose relying on one thing, and that one thing is taken away,
Hmm.
put you in a bad spot. And I know most of America is still doing okay. Hearts go out to those who are affected by this. If you got a loved one ill, or if you just lost your job, or you got family members who lost your job, we're hoping and praying. We everybody come through this the best they can. But for the most of us that are still able to maintain our status quo, our way of life, this is the time to not just sit back and twiddle your thumbs, but
Right.
get your credit fixed. If you have a business, get business credit, establish business credit, grow business credit, um, get the business loan, get the personal loan, whatever you need to take care of yourself and your family, and come out on the other end of this in a better position than you are now. So that's the message we want to convey. And like I said, if you're in the South Florida area or anywhere, I'm sure that you work with clients all over the country, right?
Hmm.
Okay, so there you go. And so business funding now is here. We're still open. We still have banks. We have personal loans, business loans, real estate loans. Um, Real estate is a big topic because they're saying that a lot of people are not being able to pay their mortgages, and that's going to cause a lot of housing.
Hmm.
It's going to cause a surplus in inventory in the
It sure
housing
will.
market. And when that happens, you know, some people wait for these type of
Oh
situations,
yeah.
and
Oh yeah. They wait.
then that's the only time they invest and buy up more property. Uh,
Hmm.
so I know it sounds like a cruel thing. This is America. This is not the first time this has happened. that the circumstances outside of ourselves have affected the situation. 2008, back in the 80s and 90s, is cyclical. We
Mhm.
have to stop living the same way. We have to start educating ourselves on these financial tools,
Mhm.
resources, so we can, tap into it and teach it, pass it on to our children, you know,
Of course.
so they're not affected by these type of things. Um, so I want to thank everybody for watching, share, like, do all that stuff. And if you need to contact any one of us, we'll post that in the comment section of the video. And I apologize again for the technical issues starting late, but you guys know how it is. Technology gets all of us once sooner or later. You got
Right.
any last words?
Oh, no. Yes, just be prepared. Just be prepared to play some Monopoly. That's all. Get your credits together. Um, let me just mention what is credit, because usually I try to explain what it is, because there's a lot of mix up with credit and debt. Okay, so credit is just the ability to buy now and pay later. you know and I know there are a lot of the Dave Ramsey folks out there, that believe in cash. Hey, I believe in it too. But they both go hand in hand. It's just like borrowing. It's just like having that family member or that friend that you trust and they trust you to lend money to, because you guys establish that trust. So it's the same concept when it comes to the bank. You want to establish that trust. You want to establish the trust to, when in the future, if you ever want to borrow money, because they seen your track record, they can say, okay, I can trust Jeremiah because he has really good relationships with these creditors. These are his buddies. You've established that relationship. So when you're trying to build new relationships with new lenders and new creditors, and your credit report shows that you're responsible, you pay on time, you don't max out what is given to you, you have a long, extensive relationship. That is what credit is. Credit does not put you into debt. Yes, you do acquire debt when you're borrowing, but your goal is to pay it back, right? So if you're trying to get what you need right now, you need to establish the credibility. And like I tell most of my clients, it's not a race, it's a marathon. You cannot speed this up. I mean, there are ways to go about it, but if you want to show how credible you are, establish that today. Because the moment that you start today, your credit starts today. Okay. So if any of you guys have that inkling of wanting to get started, you just don't know how, I don't mind having this conversation with you. I like to shed light into, like you said earlier, the misinformation that's going out there and what people are saying to one another. There is nothing wrong with credit. Credit is just trust. That's it. That's all it is. You're just establishing trust. You're establishing credibility. And I say this at the end and end it with this. If you don't trust yourself, then no one else will trust you. So if you trust yourself with money, then your bankers and your lenders will trust you with money. That's it.
All right, that's actually a good one. That and I would normally say that'll preach. So, but I
Do
want
it.
to thank you for being patient, and we got it together. Thank you for your time. Thank you for your expertise and your knowledge, and hopefully we can help some people. So you guys look out, rewatch this, and take some notes. And next Friday, 5 o'clock Central Time, I'll have another guest and some more information for you. Thanks. Have a
You're
good
welcome.
night. Thanks.
Bye-bye.
All right.